Komið sæl öll sömur. Ég heiti Arnar og fyrir hönd IcelandSIF býð ég ykkur hjartanlega velkomin á þennan fræðslufund. Í dag ætlum við að fræðast svolítið sjálfbærni fjármálafyrirtækja og ætlum að leggja sérstaka áherslu á upplýsingagjöf fjármálafyrirtækja samkvæmt 8. greinar flokkunarreglugerðar ESB. Markmið í dag að hafa fundinn svolítið praktískan svo hann geti gefið okkur svolítið gagnlega innsýn inn í innleiðingarferlið. Og til þess höfum við fengið til okkar 4 mjög spennandi erindi. Fyrst tekur til máls Jonathan Krakow sem stýrir sjálfbærniteymi Deloitte í Noregi. Jonathan verður með svona tiltölulega almenna umfjöllun regluverkið og þær lagakröfur sem ræður. Því næst fáum við erindi frá Shalini Sewradj sem sérfræðingur í sjálfbærnimálum hjá hollenska bankanum ABN AMRO. Shalini ætlar að vera með svona praktíska reynslusögur af reynslu bankans af innleiðingarferlinu. Þá kemur Ben Leblik frá UN PRI sem sérhæfir sig í sjálfbærniregluverki ESB. Erindi hans meðal annars unnið upp á skýrslu UN PRI innleiðingu flokkunarreglugerðarnar. Og svo síðast en alls ekki síst tekur Halldór I til máls. Halldór hefur umsjón með ársreikningaskrá og hann ætlar að segja ykkur svolítið frá sjónarhorni eftirlitsaðilans. Að því loknu höfum við vonandi tíma fyrir nokkrar spurningar en dagskráin svolítið þétt og ef við föllum á tíma þá getum við alltaf sent okkur spurningar á netfangið IcelandSIF @icelandsif.is og við munum koma þeim áfram. Fundurinn verður tekinn upp og svo munum við deila glærum eftir fundinn. Og að lokum vil ég bara minna gesti að stilla á mute svo það verði engar óþarfa truflanir. En að því sögðu þá okkur ekkert að vanbúnaði og ég ætla að skipta yfir á ensku. Jonathan, can you hear us?
Yes, I hope you can hear me too.
Yeah, we can.
Could you
great. Please share your slides?
Yes, happy to do so. Just let me know if it works. I heard already my name. I have to say it's a little bit cryptic to understand Icelandic for me, but I understood that you gave us a short introduction.
Yeah.
Okay. And if I go to full screen, please confirm that this works.
Yeah, this is perfect. The stage is yours, Jonathan.
Good, thank you. Yeah, so thanks a lot for the invite and this opportunity to discuss in this forum here. It's always a pleasure to be among sustainable finance practitioners, and I will try to say a little bit in the next 13-14 minutes about sustainability regulation in general and how the taxonomy fits into this. Just shortly about me, my name is Jonathan Krakow, working for Deloitte Norway as Sustainable Finance Lead. I moved 2 years ago to Norway, and before I was in Switzerland at the University of Zurich, working for 6-7 years there on the Sustainable Finance research agenda. So my plan for today, for the next minute, is since I have the beauty to open this forum, is to cover a little bit like, okay, why acting now? This is the title I give it. So why do we need an EU taxonomy and what is the intention behind it? Then how does it impact the financial industry? So how does it relate to the financial industry and how the financial industry can start to address the requirements of the taxonomy? But also I want at the end close it again, like why acting now? So what still needs to be addressed? So what is the taxonomy, but also what the taxonomy is not, so that we don't forget the bigger picture here. And I have quite busy slides, so don't be surprised by this. I suggest just following my presentation, and that's what I'm talking about. And I heard that the slides will be shared with you afterwards, so I thought it's also nice if you get the opportunity to read through it again. So why acting now? And this is obviously like starting very, very big, and I don't want to be too long time on this topic, but the main factor for the EU taxonomy, right, is, and I think we can all agree to this, is the urgency of climate change, the urgency of global warming, and that we have to act. Right, so we are just in the days of the COP28, and we all know, okay, for about 30 years now, we are trying to address climate change challenges. But apparently, also, if we look at the last years, progress was relatively moderate. So with the Paris Agreement in 2015, there was then a clear decision, okay, we don't want only to look at greenhouse gas emissions, we also want to look at temperature, but in particular, it was clear, like, okay, we want to go the next step. We want to make sure we achieve also our targets of reducing global warming. And the European Union decided, okay, we want to be a front runner. We want to take here a role model. And they came up with the idea of the European Green Deal. Okay, so the European Green Deal is a combination of several different regulations and topics, etc., where they try to attack sustainability in a holistic way. So when I talked about sustainability 8, 9, 10 years ago, you could impress people by saying, yeah, what is ESG? And when I ask what is sustainability, usually you got 5 different opinions out of 4 people, which is to some extent still the case, right? We all have some different views on sustainability, but with the EU taxonomy, they are trying now to set some dictionary, some catalog, how to define sustainability related to the European Green Deal, related to the economic activities. So in that sense, the EU taxonomy is supposed to be the cornerstone, the fundament for a broader agenda. Because, so now I'm coming back again to this bigger picture. Yes, we want to combat reduce greenhouse gas emissions. We want to combat climate change, right? This is a one different part. And then at the same time, and this was the idea of the EU Green Deal also to some extent, we want to leverage the means, the intentions of the financial sector. And sustainability is not a completely new topic in the financial sector. I'm sure many of you here in the room are working with this or are following that trend already for many years. But what was a challenge, or is still a challenge, is that the term sustainability or sustainable finance is very broad defined, right? So it can be exclusion, it can be impact, it can be on the social part, it can be on the E part. So there was the idea, okay, if we want to do this game in a serious way, we have to fundamentally think about a definition of sustainability before we go into the next steps. Okay, so the taxonomy in that sense is a definition, a catalog, but there's also a disclosure exercise behind it. Now let's bring this to the financial industry. I don't want to spend too much time on defining the taxonomy, right? So I guess most of you heard about it, but key element or key message of this slide is obviously like, okay, this is relatively complex. In that sense, there are more than 100 economic activities defined in our days. There will be maybe at some point 500,000, couple of thousand, which are forming the so-called eligible activities. And then we go by criteria, and the criteria are individually tailored to the economic activities by significant contribution, do no significant harm, and minimum safeguards. Okay, so then just looking at the Climate Change Delegated Act, we see we have 700 pages of annexes. So you need to become really, really an expert for all kinds of industries, for all kinds of economic activities to do the assessment. What is taxonomy eligible? What is taxonomy aligned? So yes, it's very good to be technical driven and holistic. At the same time, to address this in a systematic way, you also need to have a systematic approach, right? We cannot expect that every one of us is an expert in reading 700 pages and to go through all these criteria. And behind these pages are even more specific kinds. So you have to understand, I don't know, the size of water circulation systems in real estate or something like this, or you have to go to water reservoirs and to understand the speed of the water flowing there. With all respect, this is something that not everyone can solve. So what is the overall idea now is, okay, let's bring all kind of players together here. And this pyramid here to the right is my understanding, our understanding of how the different regulations can play here together. So, like I said, the fundament is the EU taxonomy, right? So the EU taxonomy is, in that sense, a definition system with very, very specific criteria in the different areas. Then next, we have NFRD, respectively in the future it will be CSRD, that requires all larger and in the future also medium-sized corporates that are listed with a certain threshold of employees to do the EU taxonomy assessment on their own. So they have to understand what I had in the slide before. Okay, that are our economic activities, that are the eligible ones, that are the aligned ones, etc., and need to disclose this information. This can be used then by the financial sector to steer their financial streams. Yeah, so they do not have to do the heavy assessment, but rather can use the information from the NFRD, from the CSRD corporates on an aggregated level, so they are disclosing their own KPIs, and say that part of my investments is sustainable according to the EU taxonomy. Yeah, so they can still claim they are sustainable in many, many different ways, but now we have one way, which is the EU taxonomy way of sustainability, so EU taxonomy aligned, based on the information from the underlying portfolios. Then, as a financial institution, it can be an asset manager, it can be a bank, right? One thing is what I have in my books. The other thing is, okay, what I'm selling to the market. So if I'm, for instance, an asset manager and I'm selling different funds and I bundle my investments in different ways, then SFDR will ask you to disclose the information about the sustainability of your investments on a product level. So is fund A, is fund B, is fund C sustainable, and to what degree? Okay, and this all, so even so there's this overall goal of we want to be climate neutral by 2050, this all is based on the idea that we have well-intended investors. So the overarching idea is we do not force to be taxonomy aligned or sustainable, but we think that the investors at some point will prefer or look for preferable conditions for companies, for economic activities that are sustainable. So there's a clear idea, if we make sure that the right information is channeling up to the investor, that we come into a transforming mode and change our world. But here's already one key limitations I would like to highlight, and I'm coming back to this at the end of my presentation, which is the EU taxonomy. It's a green taxonomy, it's not a brown taxonomy. What do I mean by this? Well, we have criteria how to assess an economic activity towards their sustainability criteria. So we could say the way how you are producing electricity, or the way how you are manufacturing cement, or the way how you are transporting passengers, this is sustainable. What we cannot say is, this is how you do it in a brown way, this is how you do it in a bad way. It's not a brown taxonomy, it's just a green taxonomy. So everything else, if you want so, is gray. This is my understanding of the taxonomy here. Okay, but coming back, so what does it mean, first of all, for financial institutions? So like I said, it's a relative, let's say, well thought through regulation, but also having several layers of complexity is, okay, companies need to assess based on their business activities, the sustainability of their economic activities. And we now, for financial institutions, it's not owning the buildings. It's also not renting a car fleet. For them, their main business activity is linked to their financial activities, so linked to their lending and investment parts or underwriting parts. So the EU taxonomy defines 3 different KPIs for financial institutions that they might need to disclose depending on who they are, which is the GAR, the green asset ratio, the GEAR, the green investment ratio, and the green underwriting ratio. And for all of them, the key is I have in my upper part of my equation, so in the numerator, the green number, so what qualifies as taxonomy aligned, and in the part below, what is not taxonomy aligned, so that I get a ratio of 2%, 5%, 50%. That is saying that part of my financial activities is sustainable, is taxonomy aligned. So how to get them there? That is the next question. Well, it needs to some extent an assessment of your portfolio, right? And the numbers here are artificial, but they are to some extent also exemplary, because first of all, we will see alignment numbers now the first time in Q1 2024. Lower your expectations. So if we see at pre-studies, if we see at input from the regulator, we can expect that only in the single-digit numbers we will see on average a taxonomy alignment. What does it mean? Well, it says we are today still in a phase where we have some sustainable activities, but to a large extent we are not there. We still have to transform a lot of our portfolios. Okay, and then you get the information from your underlying investments if they are aligned or if they are not aligned. And for some parts, maybe you can still do not do the assessment because of lacking of data. And let me jump over it. So if we go, for instance, to the case of a bank, you have to look at the balance sheet overview. And then you divide it into different parts, right? You can say, okay, that are my corporates that are disclosing KPIs. And here I can aggregate the information. Then there are corporates that were not part of it because they are small. And for banks, this is another additional layer here. They also need to assess their private banking part, in particular the mortgages and the car financing. And I'm sure we will hear more about this in the next talks. But for you now as a bank focusing on the NFRD part, or as an asset manager focusing on the GEAR, the key is that you get corporate KPIs and try to aggregate them in a systematic way that you can disclose at the end of the day your GAR, GEAR, or GUR. And one way, which is relatively straightforward, which I highlight here on the slides, is to do it via a vendor who helps you to collect for 30, 300, 3,000 of these companies this information in a systematic way. Okay, so that is to some extent the EU taxonomy. So that's great, right? We try to be very strict on the definition of sustainability and having a mechanism how the companies are doing the assessment by themselves, and we as financial institutions can use this information, aggregate it, and in a single KPI, in a single number, give some information out to the investors who can then make the decision. But, and this is the first but, like I said, it's a very strong focus on the green part, not on the brown part. And we now, today, there's also a lot of brown part. So 2 messages I want to bring here. One is EBA Pillar 3 disclosures were mandatory for usually the top 3 banks, largest 3 banks in the country. Focuses also on the risk part. So they highlight the green one. So also the green asset ratio from the taxonomy needs to be disclosed. But they also say, please assess what is the risk part here. So what is your emissions that you disclose? What are potentially stranded assets, etc., etc. So that you get a more holistic picture. And this is a slide I would then like to end with, is indeed, I think it's good that we start to understand better what is sustainable under the EU taxonomy. But don't forget the other big exercise, which is, okay, many things do not qualify under the taxonomy as green. But then we have to think like, okay, what can we do with the brown part of our balance sheet, the brown part of our portfolio, that we can transform and mitigate the risk so that we are not ending in a scenario where we have some very green part, but the rest is still very, very brown. It was a lot of information in a very short time. But I hope that it's opening the discussions for more.
Thank you so much, Jonathan. It's very clear and very informative. Shalini, you're up next. Are you there?
Yes, I am. Can you hear me correctly?
Yeah, we can hear you.
Okay.
Would you please share your slides?
Yes. Let's see. Okay, I think you can see it correctly now in presentation mode.
This is great.
All right,
go ahead, please.
Okay, yes, thank you. And thank you to Jonathan. I think your presentation gave a very clear general overview of EU taxonomy. Today I will be going into the assessment a little bit more, just so you can have an understanding of how it exactly works in practice. So I'll be going mostly into the main KPI, which is the green asset ratio, and how we have collected the necessary data and information for us to report. But first, very quickly, I know I was introduced. I didn't get all of it, except for maybe my name. But good afternoon, everyone. So my name is Shalini Sewradj, and I work as a sustainability policy expert within ABN AMRO Bank. So today I'm also presenting from our headquarters in Amsterdam. And in our annual report for 2023, we will report on alignment for the first time. So I will take you through this entire process, hopefully within the next 15 minutes. But before I go into the assessment, I wanted to do a quick zoom into the regulations that are relevant. I won't go too much into it because I think Jonathan mentioned a lot. But so the main focus of today is, of course, taxonomy. And the taxonomy is, together with the NFRD and the Pillar 3 ESG risk, a result of the EU Green Deal. And together they form the Sustainable Finance Regulations. And they are all very much interlinked. So firstly, if I quickly go through the NFRD, which is going to be replaced by CSRD as per the 1st of January coming year. The link with the EU taxonomy is, of course, that all undertakings that are in scope of the non-financial reporting directives are required to report on their non-financial information, and EU taxonomy reporting is part of that information. And I think important to mention here from a bank perspective or a credit institution perspective is that as the CSRD will replace the NFRD, this will mean for us as a bank that more of our clients will be in scope of reporting for the EU taxonomy. So therefore, also more clients for which we need to perform the taxonomy assessment to see whether our loans and advances, for example, are taxonomy aligned. So that means more work that is coming for reporting on EU taxonomy. All right, so then I will go a little bit into how it works in practice. So the EU taxonomy, I think from a bank's perspective, it provides a classification system of the portfolio of a financial undertaking in how sustainable their portfolio is, and whether, if possible, in the future, we can actually steer our capital towards such sustainable activities. So that is really the main focus and the main perspective that we are taking as a bank. And then important to note that I think was also discussed in the previous presentation is that the main KPIs to report on for the EU taxonomy are the green asset ratio and in addition to that also off-balance sheet exposures. So the main focus of this presentation will be on the green asset ratio because it's our main KPI, and also the remaining two KPIs, so trading portfolio and fees and commission income, they will only be relevant as per 2025 annual report, so we will report on it in 2026. To focus on the GAR, the green asset ratio, we will need from our clients taxonomy, eligibility, and alignment data for our entire banking book of all counterparties that are in scope for the EU taxonomy. And this reporting is necessary for both stock and flow information. Because this year will be the first year reporting on EU taxonomy, flow information is of course not yet available because it would require us to compare. So flow will be relevant only next year. And then the same data is actually also necessary for our off-balance sheet items. So we will need eligibility and alignment data for our assets under management and financial guarantees. Then I will focus a little bit more on the GAR. So the GAR is meant to provide a quantifiable evidence, basically, that demonstrates the extent to which the activities that we finance meet what the EU taxonomy defines as sustainable. So the GAR will bring a new element to these commitments, as it will provide a more transparent screenshot of the bank's portfolio and also its level of sustainability. Therefore, any discrepancies between climate goals and, for example, commitments with what actually happens in practice will be identified and hopefully tracked more quickly and clearly. So then to focus on the information that we need to report on a GAR is, on the one hand, the taxonomy aligned assets, and on the other hand, our covered assets for counterparties in scope. So I will try to go into those two necessities a little bit more. So first, I think it's important to discuss the counterparties in scope of the EU taxonomy. So as you can see on this slide, it is household, NFRD undertakings, and local government financing. And then NFRD undertakings should be split in financial and non-financial undertakings. And another important point to make here is that there are specific products that are in scope. So for households, there's only 3 types of products, like renovation loans, car loans, and collateral by residential immovable property, so mortgages. For local government, it is only specific purpose loans. And for NFRD undertakings, we look at loans and advances, debt securities, and equity instruments. So only that portion of our portfolio will be in scope. Then for all of these counterparties, we will need to do the EU taxonomy alignment assessment to gather the data to report on our GAR. So therefore, there are 2 ways that an assessment can be done. And that it really depends on the type of loan or the type of activity that we are financing. So on the one hand, you have the unknown use of proceeds methodology. And in this case, we don't know the activity that we are financing for our client. Therefore, the assessment is done on a client level, where we gather the eligibility and alignment percentages from the annual reports of our clients. Well, because we need an annual report in order to make this assessment, this methodology is only relevant for NFRD undertakings because they are the only ones who have an annual report. Then the second methodology is the no use of proceeds methodology. In this case, we do know what we finance. So an assessment is done on product level, and data is collected through bilateral conversations with the client. To have a quick sum up, if we look at the relevant assessment per counterparty, we can indeed see that for unknown use of proceeds, only financial and non-financial NFRD companies are relevant, and for no use of proceeds, all the counterparties are in scope. And as you can see, for the no use of proceeds, we use the technical screening criteria. So I will go into that process a little bit more in the next slide. So let's look at a practical example so you can understand basically how we do the assessment and how we collect data that is relevant. So for an activity to be sustainable under the taxonomy, it must contribute to at least one of the 6 environmental objectives on the screen. But that is not all. So, for example, if we take an example of financing a loan to a wind farm. Well, we would like to determine whether we can label this loan as taxonomy aligned. And for this, we need to start at our client activity. And in this case, NACECOs, for example, can help a lot. And in this case, the activity is electricity generation by a wind farm. So for wind energy, we look up the NACE code and see that the environmental objective is climate change mitigation in the EU taxonomy regulation, because wind energy leads to a reduction in CO2 emissions, for example. So then when we've established to which objective substantial contribution is made, we look at step 3, where we can check if the wind farm does not, for example, cause any significant harm to the other environmental objectives. So, for example, it is placed in a park with a lot of biodiversity, so then it harms the biodiversity objective. But if that is not the case, we look at step 4, which is the social dimension of the activity, basically, because we don't want an activity that contributes to the environment at the same time violate human rights, for example. So the minimum safeguards require us to check whether our clients have due diligence processes in place to avoid any human rights violations. Then if all of these criteria are complied with, we can conclude that the loan is taxonomy aligned. So in this case, either the entire loan is aligned or the entire loan is not aligned. That is different for an unknown use of proceeds. So if we move on to an unknown use of proceeds example, as I mentioned, we use the information from our clients. So I've taken the example of ABN AMRO's client BAM. And in their annual report, they have reported, as you can see, 13.3% of alignment and 76.9% of eligibility. So what we do is we take those percentages and compare them with the outstanding loan we have towards BAM. So as you can see, their alignment percentage is 13.3%. So it can be any percentage in between 0 and 100%, while with the no use of proceeds, it is either 0 or 100%, basically. So that is how we gather the data for unknown use of proceeds loans. And then we have all the necessary taxonomy aligned assets information for the first part of the GAR. So then we need the second part, which is the EU taxonomy covered assets. And this next slide, it's quite complicated, or there's a lot of information, but I'll try and break it down. So to calculate the GAR, as I said, we need to compare our taxonomy aligned assets with the EU taxonomy covered assets. And in this slide, I've made a breakdown of the balance sheet per GAR category. So the first split can be found between on-balance sheet items and others. And as I mentioned before, we also need to report on our off-balance sheet items. So therefore, this split is quite important. Then the second split is between assets, total GAR assets, and assets excluded from the GAR. So the entire gray block in this slide is not relevant for the EU taxonomy. While the green part basically portrays all of the EU taxonomy covered assets. So we would need all of the green part for the second part of the calculation of the GAR. And then even though all covered assets are relevant and in scope, as I just said, there's an additional split made in these assets, as you can see. So you have the numerator and the denominator. So the denominator refers to all of the green parts, and the numerator is only a specific part of it. And with the numerator, this is actually the taxonomy aligned assets taken into account in calculating the GAR. So as you can see, the products in scope for the counterparties in scope, that is all part of the numerator. And to get that information, you would need to do the taxonomy assessment, as I just explained. Then if you look at the formula, the numerator is the taxonomy aligned data. So the second part is the denominator, which includes products for which the taxonomy assessment is done, but also, for example, the gross current amount of exposures to non-NFRD financial undertakings and derivatives, for example. So practically, when you look at this balance sheet, the GAR is calculated by dividing the numerator part by the entire denominator. If you do that, then you have the green asset ratio, KPI. Yeah, so finally, how do we then report on this KPI? Well, for the GAR, the information, as just discussed, is linked to the balance sheet, and we are required to report on this information in 4 EU taxonomy prescribed templates. So we have template 1, which is basically all the assets for the calculation of the GAR and the splits made between the counterparties and the product. Then the EU taxonomy also asks for a second template on the GAR information, which is sector information. So basically what we need to do is link our NACE codes to the exposures, so they can have a better idea of what exposures we have a lot of aligned products in, for example. But then for the off-balance sheet KPI, it is done a little bit differently within ABN AMRO at least. So for financial guarantees, the same eligibility and alignment assessment is done for specifically guarantees backing loans and advances, debt securities and equity instruments that we have assessed as eligible also. And then for the assets under management, we refer to our client assets, and therefore we do not perform this assessment ourselves, but use eligibility and alignment percentages provided to us by data providers. So these off-balance sheet items will also need to be reported separately in the 5th mandatory template prescribed by the EU taxonomy. So that is a little bit of the data that we collect within ABN AMRO and how we are reporting on it. So in our annual report that will come out, I think in somewhere in Q1 of 24, we are making a first step in reporting on this, and hopefully we can continue to improve also when indeed more financial and non-financial undertakings also report on their percentages. Yeah, years to come we can try and improve it, but this is how we are doing it at this moment. Okay. Then I think I'll...
You're mute, Anna.
I'm mute. Thank you so much. Okay, Shalini, thank you so much. This was very helpful, valuable to get a bit of a deep dive into your experience. Next up, we have Ben. Hi, Ben.
Hi, everyone. I hope you can still hear me.
Yep.
I'm just going to try and upload my slides. There you go. Can you see this?
That's perfect. Thank you.
Great. So I'm Ben de Bleek. I'm a senior policy specialist at the PRI. First of all, thanks to Anna and IcelandSIF for inviting me to this really great session. Maybe very quickly a bit about me. So I've been working on EU policy for the past few years at PRI, essentially helping our investor members implement the EU sustainable finance policies like the taxonomy and SFDR, and also developing policy recommendations based on these different experiences. And in this capacity, I also participate in the work of the EU platform on sustainable finance, which was set up to advise the European Commission on the taxonomy and on the sustainable finance agenda more broadly. So for those that don't know the PRI, so it's an international network of institutional investors, which was launched by the UN in 2006. And the aim is to support our signatories in implementing the 6 principles for responsible investment, which essentially revolve around incorporating environmental, social, and governance factors into investment decision making. And as I mentioned, so I work in the PRI's policy team, which aims to kind of tackle the broader system level obstacles to aligning investments with sustainability goals. And we do this in different regions around the world. So I will aim to give you a by no means exhaustive snapshot of how investors specifically, but also a little bit of the broader market, how they are implementing the EU taxonomy, and looking at, reporting, but also more broadly, the different use cases for the taxonomy and what the key usability challenges are and how the Commission and the platform are working to facilitate this. So PRI has been working with its signatories to test the taxonomy since the first criteria were published back in 2020. So back at the time, we developed a series of case studies of investors using the draft criteria at the time, which was proposed by the Commission's expert group, but they weren't officially adopted into law yet. So our goal was to sort of work with investors to test how these work in practice. And then last year, we published an update to assess progress, which is the report that you see on the slide here. And this report essentially summarizes some of the key use cases for the taxonomy, but also the implementation challenges. So with all these reports and case studies, we made a conscious effort to look beyond just the reporting, as I think so we and many of our investor signatories also agree that this is where the taxonomy as a tool, as an instrument, can really have the biggest impact. And I think, as Jonathan explained really well, the taxonomy was originally designed to act as a sort of common language or base or a sort of benchmark for the EU's sustainability or sustainable finance agenda. And today, a lot of the focus is understandably on ensuring compliance with the reporting requirements. But the investors that we spoke to identified many different applications for the taxonomy across the investment value chain. So, for example, assessing the sustainability preferences of end investors or beneficiaries, identifying opportunities for investments that make a substantial contribution to environmental objectives. Another is due diligence, which is actually, in the PRI work and some of the work we've been doing recently with the platform, we found many examples of investors using the taxonomy voluntarily for due diligence processes before they invest in a specific project or a fund. So not just for looking at the sustainability of their existing investments, but also using this as a kind of standard framework for checking substantial contribution, do no significant harm, but also, kind of more social aspects via the minimum safeguards. And we actually found these examples span a kind of a range of different asset classes, including real estate, infrastructure, so not just kind of typical listed equity asset classes. And one other use case which is particularly relevant for listed asset classes is using the taxonomy to guide stewardship or engagement activities with investee companies. I'd say this is slightly more nascent at this stage, but it's definitely been highlighted by investors as possible use case. And finally, so using the taxonomy reporting to actually measure sustainability outcomes really at the level of the portfolio and also in conjunction with transition plans. So for instance, to showcase how a portfolio is aligning with net zero, for example. So as we'll see, there's some examples of maybe less so at the investor level, but definitely at the corporate level, some companies doing this or starting to do this. So whilst there are good use cases for the taxonomy, and as I said, there are some examples of these practices. I think the reality at this stage for the wider market is that we're not quite there yet. And for these broader uses to be effective, we first need to get to a point where there's a critical mass of taxonomy reporting from different economic actors, and that we can really trust the KPIs and the underlying data that that is reported to be of sufficient quality. And so recent studies have shown that whilst the picture is improving, it will take a bit more time before we get there. So the reporting requirements are still being phased in, and I think as Shalini's presentation demonstrated, this is definitely not a straightforward exercise for whether it's for financial institutions or corporates. So, for example, at the funds level, you can see from this slide that Article 8 and 9 funds, so they're defined by the SFDR. Today, they barely report against the taxonomy. So this data from Morningstar shows that over 90% of the Article 8 funds in their sample, so these are funds that promote ESG characteristics in some way or another. So over 90% of those funds report zero taxonomy alignment. And for Article 9, which are funds with a specific sustainable investment objective, that figure is lower, but it's still as high as 70%. So I think this is understandable for Article 8 funds, which don't necessarily claim to make a specific contribution to outcomes, but you would expect Article 9 funds with an environmental objective to at least report their alignment, even if it is relatively low. But there are, I think, good reasons for this. I mean, the first one is the lack of data, with the corporate reporting only becoming available now or as of this year, and I mean, we expect this to improve over the next few years, especially with the CSRD, as more companies fall under the scope. As we will see a bit later, I mean, for now, the quality of the reporting is still quite patchy, which makes it challenging when you're looking to report this at the funds level or the portfolio level. A second reason is maybe the usability of the criteria. So especially the do no significant harm criteria is quite challenging sometimes to implement. There are different types of criteria. Some are quantitative, which is usually quite straightforward, but others are linked to specific EU legislation or different processes. And often the latter involves quite a bit of interpretation. And this is, particularly tricky to apply when dealing with SMEs or kind of corporates in non-EU countries. And finally, also I think another challenge is the fact that the regulatory environment is changing very quickly, and the criteria for the environmental objectives, for example, was only just adopted quite recently. And I think many organizations, especially smaller ones, find it difficult to keep up with the pace of the regulatory change. And I think this kind of quick pace has also led to some consistency issues within the different policies. So, for example, some of the DNSH criteria is not always consistent with environmental metrics under SFDR. So, for example, the principal adverse impact indicators under SFDR. But despite these challenges, there is some good news. I think this year, so as I said, the non-financial companies reported their taxonomy KPIs for the first time. And despite these issues, I think the early evidence that we're seeing from this year's reporting cycle suggests that the taxonomy can be used as a forward-looking tool for transition for investors. So as you can see on this slide, so this is just some average taxonomy alignment numbers from PwC survey. And as you can see, the CapEx alignment, so CapEx is capital expenditure. It's one of the two KPIs along with, or three, I should say, along with turnover and OpEx. As you can see, the capital expenditure alignment numbers are consistently higher than the revenue KPIs, and this is particularly the case in high impact sectors like utilities and cars, for example. And I think this highlights the it can highlight the positive, but yet still insufficient kind of transition efforts from corporates. And it helps to dispel the notion, which is, in my view, a little bit unfair, that the taxonomy is a very binary instrument that only targets activities that are already green. And I think while this is valid for the revenues KPI, the CapEx KPI in particular is crucial to understand how companies in high impact sectors are kind of spending their way towards sustainability. There are also signs of corporates using the taxonomy in conjunction with entity level transition plans. So, for example, the CDP, which is the Carbon Disclosure Project, recently identified around 600 companies that are disclosing against the taxonomy in the context of their entity level transition planning, and including, demonstrating how spending aligns with their net zero targets. But, and there is a but, is that as many of these studies also show, when you dig a bit deeper into the reports and into the data, there's still quite a bit of variation in terms of the quality of these disclosures. So whilst these companies typically report this information in their, oh, I see the slides have gone. Try to upload them again. Apologies for this. Okay, and I see we're running out of time, so I'll try to speed up a little bit. So yeah, essentially, just to make the point that not all companies are using the official template provided by the Commission, and some studies also observe that not all companies report on all three KPIs. Which can sometimes make it difficult for, at least at the investor level, to have a kind of complete picture of the portfolio. And these kind of findings were confirmed by a recent review that was published of taxonomy reporting that was published by ESMA, the European regulator, which suggests there's still some room for improvement in terms of adoption of the regulatory templates and the consistency of the disclosures across companies. So essentially, whilst the general uptake is high, companies still need more time and guidance to fully comply and adopt the different disclosure rules under the taxonomy, which is perfectly understandable. And so, recognizing this, the platform and the wider EU policymakers are working, especially the Commission, are working hard to support the market with implementation tools and guidance in the short term to address some of these key usability issues. And so earlier this year, the Commission published a number of tools to support this. So one of these is the Taxonomy Compass, which essentially distills the 700 pages of technical screening criteria of delegated acts into an online platform where you can sort of search for the criteria by sector and activity. So yeah, as you think, you'll all agree that this is quite useful. There's also a calculator that essentially allows you to input your data into the tool, and then it calculates your eligibility or alignment KPIs. And the Commission has also published a kind of common repository of FAQs, which I think at the moment mostly focuses on non-financial reporting, but it's aiming to publish, I think, in December, an FAQ for the financial sector reporting. So I think this, along with all the other guidance and support that's being provided by the wider ecosystem, is really crucial to ensure that the taxonomy can fully play its role as a common benchmark and an enabler of sustainable transitions beyond just reporting and compliance purposes. So I do have a final slide on what the platform is doing, but I'll just leave it here so you can read it. And as I see, we only have 5 minutes left. So over to you, Anna.
Thank you so much, Ben. This was really interesting. Good, nice to have a bit of a zooming out. So now I'm going to change over to Icelandic.
Yeah.
Takk kærlega fyrir að hlusta. Við ætlum að fara smá yfir tímann. Þegar nú mjög spennandi erindi frá honum Halldóri Pálssyni. Halldór, heyrir ykkur?
Ég heyri ykkur.
Ok.
Eru glæruna komnar upp?
Já, þetta komið.
Já, super. I would like to start with thanking IcelandSIF for inviting me today. My name is Halldór Pálsson and I am the administrator of registered annual accounts at the Icelandic Revenue and Customs. And please don't ask me why we are located at the Revenue and Customs, it's just history. Today I'm going to talk about the opportunities and challenges that we are both as a regulator and also as a preparer and auditors are facing ahead of us regarding to the EU, European Union Sustainable Finance Agenda. By that I mean the Taxonomy, the Sustainable Finance Disclosure Regulation, and also the Corporate Sustainability Reporting Directive and the European Sustainability Reporting Standards. The goal, as I think it was Ben was talking about, or Shalini, is to facilitate necessary capital flows to sustainability objectives. And for that goal to succeed, investors must be able to make informed investment decisions in line with the sustainability-related objectives. But it's not only the investors, it's also the public which want to know which product or service to buy and use without adding negative environmental and social impacts. Therefore, that's keyword transparency and consistent application of sustainability information framework is the key. And in the non-financial information, we don't have that. That is missing. That part is missing in the non-financial information framework. I'm going to here. I'm going to talk a little bit about how we structure financial supervision in both EU and in Iceland. And you can see that there are basically three organizations. This is ESMA, the European Security Market Authority, EBA, which is European Banking Authority, and EIOPA, which is European Occupational Pension Authority. The Icelandic Financial Supervision Authority at the central banks are basically part of, or the Icelandic arm of those three entities. We, in the registered annual accounts, only supervised annual reports. That is, our scope is only the financial statement, the management report, and the non-financial information is part of the management report, and the auditor's opinion. That is all that we are allowed to, how can I say, enforce in Iceland. So, ESMA, EBA, or EIOPA, all the other information, or all other, like I say, statements or reports, the enforcement that is with the Financial Authority of the Central Bank of Iceland. One thing that I would like to make clear when I talk about annual reports, I'm talking about the final statement, like I say, the management report and the non-financial and the opinion, and this is a legal definition. It's not what most of us think when we're thinking about that I heard the term annual report. The annual report, most people would think about that beautiful glossy report that undertakings issue every year, but this is a legal definition. We go over to the object of information, why we are doing what we're doing. How can I say, the objective of environmental sustainability information is basically the same as enforcement of financial information. We are trying to ensure that undertakings that are required to prepare those information or reports do so in accordance with the sustainability information framework. And what Ben was talking about earlier about the market doesn't really trust this information. This is the key. The transparency is the key for people in the future to trust this information, to use this information. Without constant application of them, that transparency simply will not be there. And this also helps in making the position of sensitive information comparable to the financial information, but that is also the goal of the European Union. They want us to look at the sustainability report and the financial report as two equals. And our main role as an enforcer to ensure that the protection of investors and the promotion of market competence as well to prevent avoidance from the regulator application, that is, you are not going to deviate from the framework. A little bit of the European Union Sustainability Finance Agenda. It's all basically start with the Paris Agreement and the UN 2030. The Taxonomy regulation, we have already implemented that. It is a groundwork for the European Union philosophy behind the European Green Deal. And if we are going to promote the efficient use of resource and finance, so we can, like I say, move over to clean circular economy and stop climate change, all of this system have to work. And you see over here, we have the CSRD, the Corporate Sustainability Reporting Directive, we have the standard that are based on it, we have the EU Taxonomy regulation, we have the SFDR regulation, and the Due Diligence Directive. All of these are, like I say, the framework that we're going to use in order to support those 5 main components of EU Green Deal. Like I say, transparency, we are not going to be able to do this without transparency. The thing is that we have already, I'll go to the next slide. I'm trying to hurry as much as I can. We have already implemented the EU Taxonomy and the SFDR regulation. The Corporate Sustainability Reporting Directive, the CSRD, along the standards, are in the process of being implemented with the goals for entering into force in July 2024. That the CSRD will be part of the Icelandic law in July 2024. The implementation is as follows. Large issues with 500 or more employees will have to publish a sustainability report based on the ESG standards for the fiscal year 2024. So all other large undertakings will follow the year after 2025, and in 2026, all small and medium-sized entities are to, like I say, entered into that domain. In 2029, they are going to add non-EU European undertakings that operate in the European Economic Area. So there's like I say, this is like a stepping stone, what we have here, and we can basically see how these 3 main components come together. I'm not going to spend a lot of time on this. This slide is basically what the information is all about. We have the management report, and you see this big blue box around that. Sustainability statement or the sustainability report is part of the management report. The Article 8 information of the taxonomy is part of the sustainability statement. So you see how it works. We have the general information and disclosure. We have the E, we have the S, and we have the G, and taxonomy. And the management report, and one of the main problems that we face in Iceland is that we do not have, like I say, a culture of preparing good management reports. It has been weakness of Icelandic companies, and we have also seen that weakness in the non-financial information. This is going to change rapidly because, like when the ESRS standards come in play, it will be very structural, and I would expect us to see comparability between undertakings between industries and within an industry. So if we look at the next one, there are, like I say, big problems in Iceland when we are implementing legislation into Iceland. First of all, the EU goes through the European Council and Parliament. It's published, it's discussed, etc., and then it enters into the local law, usually within a certain time of publication. But then it starts with us. It have to be if the legislation affects the EE agreement, the EEA Joint Committee will then start the process of implementing it. That is making decision. Are we going to implement it into the EFTA, or are we not going to do it? If they say so, then it will become part of the local law. But it takes time. It usually means that it's like a time lag of minimum 1 year behind. And because the EU Taxonomy and the sustainability reporting requirement are moving so fast, it causes us a lot of, like I said, problems and headaches. Some of the legislation that falls into the scope of the EU agreement haven't been implemented. And what is even worse, some of it will not be implemented because it's not part of the EU, the EEE agreement. So we have, like I say, companies that are supposed to fulfill technical aspect of a regulation from EU, and it's not part of the EFTA legislation. It's not part of the EFTA agreement. That is one of the biggest headaches that we are facing. Another thing is that we have to translate it over to Icelandic and over to the Icelandic language, and that is also a very, very difficult task. The terminology and the words, the concept of using, we don't have Icelandic words over them, and we don't understand necessarily what it means. I can tell you one thing: the Endurskoðunarráð is working hard of trying to put out some word list and translation. There's also in EU, when they've been, like I say, translating it into the local language, such as in Scandinavia, there have been both bad translation and also very dangerous translation, where words and meanings and even articles have turned around. And the last presentation slide that I have, I think this is what most people are looking for right now. Exemption period. There was no adjustment period granted in Act number 25 2023. The European Union granted that adjustment period. Non-financial undertakings shall present required information in the tabular form by using the latest reporting template set out in Article 8 of the Delegated Act. But like I said, we did talk to the central bank and others, auditors and others, and after serious consideration, we have decided to grant financial undertaking a 1 year adjustment period. But it's not a blanket. It's not that you just don't have to do anything. It's only that disclosures may only be omitted in cases where the relevant and reliable information for non-financial undertakings are not available. Like Shalini was talking about, if you have a corporate, a general purpose corporate portfolio, you cannot, how can I say, you cannot measure how it is performing unless you have information from the companies, and that is something you get from the annual report. And thank you. This, like I say, I think I have managed to do this in a record time.
Takk kærlega fyrir þetta, Halldór. Engar smá upplýsingar koma þarna fram í lokin. Ég held að það sé bara fínt að opna kannski á eina eða tvær spurningar ef það er eitthvað sem brennur á ykkur. Við erum búin að missa Shalini og Jonathan, og Ben frá okkur, en Jonathan og Halldór eru hér. Þið getið bara rétt upp hönd eða opnað á ykkur ef þið eru með ykkur spurningar. Ef svo er ekki, þá minni ég á það. Þið getið sendt spurningar á IcelandSIF@icelandsif.is og við komum þeim til fyrirlesarana okkar og fáum vonandi einhver svör. Ég vil þakka gestum fyrir að koma. Það var mjög góð mæting á þennan fund og svo vil ég þakka Halldór og Jonathan kærlega og Shalini og Ben fyrir frábær erindi. Thank you, Jonathan, for your participation. Við sjáumst næst. Takk fyrir.